Hi, this is Andy on trendfollower.co.uk. It's Saturday the 21st of May 2017. So welcome to this video where I'm going to have a look at the different asset classes and decide what, if anything, I need to do during the next week. But before we start, a quick disclaimer: I'm not a financial advisor, so if financial advice is what you're after, then you're in the wrong place. This video is just about what I do. If you choose to copy me, then obviously you'll have to do that at your own risk. Now, I won't go into loads of detail about how I go about my trend following strategy. If you want to know more details about how I do what I do, then go to my website. This is the website here. Click on this little button here and you'll get a pop-down menu, and you want to click on how does it work, and if you go and put your name and email in there, then I'll send you a 25-minute video about how I do my simple trend following techniques with the different asset classes. So go to there for more information. But if you want to know my thoughts about the asset classes and how they're doing over this past week, then hang around and watch this video. Let's start off and have a look at how shares are doing. Now, I use the Fundsmith Equity Unit Trust to gain exposure to shares. It has a mix of UK and US shares, and it's doing pretty good. Actually, last week was an all-time high. It's dropped back very, very slightly this week, which is not bad considering the down movements that there have been in some markets. So it's really done very well. So it's above the MA52. So that to me is my decision line in the sand. So I'm staying invested in shares through Fundsmith Equity. Nice and easy. Now, property. Okay, now I had a little teaser at the beginning of this video. The teaser was a picture of property for sale, and the question, really was what will happen to the UK property market. So let's have a look at a fund that I use to be exposed to both UK and European property. This has gone up this week. It's made a further high, so this is doing very well. You can see where I got in, and so this trade is doing very nicely and made more profit over the past week, which is great. So this is TR Property Investment Trust. Now, it's rather different for the ETF that I use for exposure to UK property. This is the iShares UK Property ETF, and you can see it's gone down. It went down last week, it's gone down more this week, so it's around about the same price that I got in at. So if it goes down further, then this for me is going to be a losing trade. So oh dear, will UK property go down and hit the MA52 and close below it at some stage in the next week or two? If it does, well, I'll be out of the trade and will take a loss. You can see I got in at a rather higher price than would have been ideal. Ideally, I would have got in just above the MA52 and gone long, and that would mean my loss would be reduced. But we shall see. It may bounce up again over the next week. I'm just going to try and follow the signals and see what happens. So there we go. That's a bit of a downer. Let's have a look at gold. Now, those of you that follow my videos will know that just recently I sold my gold holdings because the price of the ETF that I follow for gold, PHGP, this is gold priced in UK money, sterling, had fallen below the MA52, and that to me was a signal to sell. Now, this last week it's jumped back up a little bit, not loads, so that's fine. What I'm hoping is that the price of gold will continue down and I'll be able to get in at a lower price. I may not be able to, of course. It may just go right up. There's been lots of volatility this week, and so it wouldn't surprise me at all if actually I ended up needing to get back in at a rather higher price than I sold it at, unfortunately. But that's just the way the cookie crumbles. So nothing to do for me in gold. Let's have a look at commodities. Now, I use the City Natural Resources High Yield Trust for exposure to commodities. I had a very nice trade that closed just a couple of weeks ago, made a 25% profit. That was a really nice move. It went down further, bounced up a little bit. This week it's gone down a little bit. So it's below the MA52, so I'm going to keep this portion of my portfolio in cash. I'm not going to be investing until the price closes up above the MA52. So nice and simple. Now, bonds, as you know, I don't trade bonds. I have 3 different bond ETFs, one in pounds, one in euros, and one in dollars. They're iShares ETFs, and I don't trade them. I just hold them. So that's it, very easy. So let's have a look at the traffic lights. I'm staying in shares, it's a green. I'm staying in property at the moment, it's a green. Certainly the TR Property Investment Trust is doing fine. The iShares UK property ETF not so good, but still above the MA52, so that is a signal for me to stay in the market. Gold, the price is still below the MA52, as is CYN, so I'm not investing in either gold or commodities. I'm staying in cash. Bonds, I always stay invested, that's always, so this will never change to red on bonds, I don't think. So that's it. What do I have to do this week? Same as last week, which is nothing. So it's nice and simple. Thanks so much for watching. If you haven't been to my website, please do. This is the website here. So have a browse around and give me some feedback, and I look forward to seeing you next week. Thanks for watching. Bye for now.